finances. Now, it has been a very rough week for the economy as the government has had to bail out several major companies. So just what does this growing crisis mean for you and your money? Here to answer that question is Nolan Baker from Retirement Specialists of Northwest Ohio and Mark Clair from the Clair Estate Planning Law Firm. Thanks very much, gentlemen, for being here. I know it's been a busy week for everybody.
Very busy.
Hard to catch your breath after what we've had going on.
Yeah, it's been kind of an exciting week.
Right. Well, Mark, let's start with you. For those folks who maybe are confused by what went on in the markets this week, what happened in a basic sense? What does that mean for the economy? Are we going into a recession?
Well, I think that what's happened is a lot of unhealthy practices by the financial industry and the financial companies. And, as a result of those practices, we're seeing a lot of scary things right now with Lehman Brothers and AIG and all these things going on. So it's kind of scary for the average investor out there. And so they definitely should be concerned about their money and they should be looking at things. And I think the important thing is to have a game plan and have some type of plan that we don't want to be paralyzed, yet at the same time we don't want to panic. And so we generally talk about a thing called asset cycle system, and that's something that Nolan does a lot of the financial design, and he may be able to explain a lot better than I could on that, but that's what they should take a look at.
So, I mean, there is action that we should maybe take, or at least be aware of what's going on to protect our money.
Absolutely. What we've been telling people over the week is, you should not be paralyzed. At the same time, you should not panic. I mean, if you fell asleep last Friday and woke up today at the end of the week, pretty much the markets ended up about where they started about a week ago. From the asset cycle, what we talk a lot about is to take a look at your money in different time frames. So you should have some money set aside for emergencies, current income needs, have some money that's set aside for pay raises accounts. That type of money should not be exposed to stock market risk. So if you had that type of account set up, you really wouldn't be too concerned about what happened in the last couple of days and with the overall economy.
And if you don't have your money with one of the companies that has been affected by this or is facing bankruptcy, should you worry at all, or does it have a trickle-down effect?
Well, I think there's going to be a lot to that, but I think one of the things that people need to realize is that, if you exclude the financial stocks and you take those out, there's so many healthy parts of our economy. I mean, there's a lot of companies here locally that are just doing fantastic. So I think there are a lot of opportunities that people can be taking advantage of right now.
Now, we know the government is stepping in here. They're calling this perhaps the biggest bailout since the Great Depression. But that is going to cost somebody, and it seems like taxpayers would have to pay it. Mark, is that the way we're heading with this?
I think so. I think that's one of the fears that people have, is that what is the cost going to be to the taxpayers, and I think we're probably going to see that. But as Nolan said, there's a lot of good companies out there that you can be invested in, and as far as the trickle-down effect, I think there is going to be some of that, because if people are selling, and if they do panic, they're not only selling the financial stocks, but they may be selling everything else as well. And so that means that even those stocks that are good companies and they have good earnings, they're going to see a drop in their price just because of the people that are panicking and selling. But smart money is buying, so a lot of times in this situation, it's a good time to buy.
And Nolan, we have about 30 seconds or so. What should folks do who are currently working? What should you do with your money? And what about folks who are maybe, say, 5 years away from retirement?
Well, the most important thing that you should be doing is don't make an emotional decision right now in the market. They say knowledge is very important, but how you use that knowledge is going to be the key to your success in this market. Take some time to get together with a financial professional and talk to somebody about the concerns that you have about things. That could be some of the best things that you could do, especially if you're within 5 years of retirement, because you fall into the retirement red zone. So take action now and don't make an emotional decision.
Right, and as you mentioned, the market did come back Thursday and yesterday, so things are actually about where they were when we started this volatile week.
Yes, it's very encouraging, because we saw a couple of days where we things really went down, but I think people are encouraged that the government is stepping in, and things are people are taking action to try to get things in order, and so it looks very good as far as the market coming back up the next couple of days after that. So. And
the radio show is today at noon, right? Every Saturday at noon?
Yeah, every Saturday at noon, 12:30 WCWA, and we do a Sunday 11 o'clock show on 1370 WSBD.
Okay, so if you want to hear more from these guys, you can certainly check out their show. And for more information on the current state of the economy and how it affects you, and much more, you can go to our website, WTOL.com.